everywhere and you are averaging. This is you are waiting for the right point to enter. Now there are different people who do different way. I'm just these are different strategies. Okay. So which is the usual investment strategy? SIP. Okay. That is your long-term investment for entry. But that is only entry strategy, right? What is missing is exit strategy. So what you should do for exits? Same thing when what is exit is when it's very simple. When you should exit? When market is not behaving properly. So what you do is you don't exit the stock, but you can sell options, covered call that to the same value. How will you decide that? When it goes in a downtrend, when the market is in downtrend, you get into covered call. You will make a lot of money in that covered call period. Once the market resumes the trend, you go back, you don't sell any more calls. That's one strategy which I have already told you. That is another way. There is another way which can be managed. Another way is you move your value from equity to cash. You sell in cash and move back from cash to equity. When you move to cash, it is not pure cash. It is against debt. So you put in debt and then move it back from debt to equity when market again rallies. So when market is doing bad, your money goes to debt. And when market does well, your money goes back to this. If you do, this is called rebalancing. So this is another strategy which is recommended. And this is a proven strategy because see, if you just do SIP, there is no guarantee you will get negative. These are 10-year SIP returns. 10-year SIP returns have turned negative and very low in the past. Because you don't know, the market in between can have a big rally and come back to wherever you started. You know, crash will bring it back to. So I'm saying it is not a guaranteed thing because your exit is not planned. This is only entry. It's your exit. So I'm saying for exit, this is where. So see, you know why these are the points to exit, because here market starts correcting or consolidating. So at this point of time, if you move to equity to debt and then move back to equity somewhere here, you are better off. Because at this point of time, market is not going anywhere, your debt will move up 8%. So this is what, so you see, if you did this now on SIP, the same SIP with rebalancing will be 28 lakhs instead of 23 lakhs on the same fund. Fund we are not changing. Fund is also same, investment frequency is same. Only thing we have introduced rebalancing in this process. And rebalancing is a long-term process. So you see difference in returns at the end for the same investment is much higher. So finally, what we realize that people can't do this because to rebalance, it requires active monitoring. Like suppose I told you now, watch that TCFL and do that. It is active monitoring. You have to watch it. And as long as it's an uptrend, you don't do it. Once it goes back in downtrend, you can start selling calls. So you choose period, right? That is also exactly you're doing this. You are actually making money when market is not going to any trend. You are using the same money to generate more capital. When market is moving to trend, then you are reinvesting the same money into the trend.
Suppose we are using the TCFL band to figure out when to exit.
Yeah, you can do that.
We should use weekly chart or
daily chart.
Daily chart.
Daily chart. Because the TC band is designed for daily chart pricing. You can use weekly also. Daily is much more effective. Anyway, most of the time. But it should stay. Once it has made a bearish pattern below the daily chart, you can start doing the covered calls. And when you make a bullish pattern above the band, then you stop doing cover from that point on. Because it's a monthly. Now weekly, if you do, then 4 weeks only. Right. So monthly, daily will be much easy because covered calls are monthly decisions. Every month you do. Okay. So even in US also, see, these are the points where market crashed. Okay. The points which I marked on the chart now, these are points where market didn't move. Basically, became range bound or diminished. In these periods, your portfolio lost in value. If you had moved the same portfolio to debt, you would have been much better off. But how do you do this? Rebalancing. This is long-term rebalancing. I'm showing you a 100-year chart. Same thing I showed in 10 years chart. Okay. If you do long-term balancing or short-term balancing, it makes a difference. What I'm saying. There's enough data to prove. But 90% people can't do it because it requires active monitoring. So we made a software. In FundExpert, there is a service which is available, which we have watched, which we have created. And there is a video also available, which you can serve. We have run this same software on for Barclays. And it does the same product, same thing there also. It auto manages the portfolio by shifting it from equity to debt and debt to equity. While doing that, it takes care of various things. Exit loads of the funds, tax liabilities of the guys, now what is the time period he is invested in. Because it's a long-term process. Now. It's not interested in short-term trades. It is interested in long-term shifting. Long-term means it takes few months and few weeks to decide a shifting. It's not happening. This is an example of a portfolio. See, the starting of the point of portfolio was same. It was 24 crores, 95 lakhs for this customer. Barclays handle customers of this nature. Okay. So this is left is their value, right is our value. We both are starting at the same point. Okay. They generated this portfolio of their own customers and uploaded on our site. because they have to generate some random portfolio. We recorded this video, okay, while we generated this. So when we generated this, we recorded this video, okay. So what happened? This is a utility we gave them. You can choose a file and upload whatever, because their formats are different than standard formats. So in their portfolio format, the file gets uploaded, okay. And once that file gets uploaded, this is how the file was looking. This is bought, this date, this is the value, all kinds of stuff. It's a huge file, okay. So once it gets uploaded, all this, see here, hold this option, that option, this entire thing is uploaded. I'm just trying to do a fast forward. So you check from this file, upload this file and submit this. This is what they did. And then you can see actually what is the total, what all is there in the thing, what funds it has, all that the software will show you as a chart. And then you have an option. So you get a portfolio breakup, you know, long term, short term, what you're holding. Then you get an option, you can run algorithm. Once you click run algorithm, then because it will give you the start date. So they have to tell from what date it is. So they chose a wrong, knowingly they chose a date where market didn't perform. So they chose 1st January 2015 because, you know, 15-16 market corrected very bad. So they chose the date and said, now you show what your algorithm will do on a portfolio like this. And then we ran this portfolio. So the original portfolio was same value. Then after what we did, our software started moving the funds in the portfolio. Okay. So in, say, for example, in 27th February, first exit alert come in this fund. So this fund, which was holding some almost 25 lakhs, got exited. So this became 0. So you see his value started changing. We are giving him exits based on our alerts because we are monitoring similar thing for each fund wise, because every fund has different constituent, every fund is fluctuating differently. Now there was exit alert on this fund, so we exited these two. So this has become 0. This mid cap has become 0. Acha. Now we also have a measure of how much this fund should correct. It is a predictive. If it does not correct to that extent, then what we understand? That probably it's not correcting to that level. It is probably consolidating. Maybe it's time to reinvest. So see, it has reinvested a part value back, 4 lakhs. So it has understanding of how much it should do and it corrects its own. Okay. It also makes sure when it's doing all that, there is no further. Now again, in this mid cap, there is exit. So this has become 0.
In the exit one shot or again?
Exit also can be staggered. That software will decide what kind of alert it is generating. So it can exit in parallel or one shot or entries also it can do everything together or it can do in partial. All that is intelligence programmed inside it because it has measures of all different, because it has huge amount of data on which it has worked. It is using that data to simulate and try to figure out. So it re-entered on this. So like that it keeps monitoring. So now we have reached 5th January. We have entered. Now you see like that they ran this for 21 months. They ran this algorithm. Okay. And you see we are on 5th March and 5th March their portfolio value is 23 crore 63 lakhs, our value is 25 crore 37 lakhs. In last 1 year, see they can actually get away with telling a customer. They must have told this story only. The customer, why my 24 crore 95, sir, market didn't perform, don't worry, it will. And it did make up after that. But see here, because we rebalanced, now we became less in equity, now we became more in debt, now we outperformed. Okay. And then finally this entire thing stops somewhere around, they finished this entire entry. They ran this up to October, and from October then they can actually they can track live also from there. So now if you go to 7th October we reach, there are months, 3-4 months in between there was no alert, neither entry, neither exit. This is a long term investing. It may not generate an alert necessarily every month. So there may be period. So now this finally they stopped this somewhere on 21st October. When it stopped at 21st October, their value was 29 crore 23 lakhs. Our value was 31 crore 13 lakhs. On a period of in 18-21 months roughly, it has or 18 months roughly, it has generated almost 2 crores more than on a portfolio of 24 crores, 10% more return. So I'm not saying it will generate 5% on average. We have seen on average we have tested 1.5-2.5% per annum it generates surplus because of this rebalancing. Which that's what you saw now in the long term, 12.5 and 15.2. The 2.7% makes a difference of 10 years becomes 5 lakh rupees. In that, it's not a monitored same process. So this was actually live with so many different funds we done. So the same process now we have made available online for any retail user, because for these guys we are charging a very fancy price because this is they getting integrated with their internal software. So we are charging a very fancy price for them. But for our own customers which may not have the portfolio of 2 lakh, 5 lakh, 3 lakh, you can upload this entire portfolio in 2 clicks. We have designed the entire thing in such a way in FundExpert that now if you have not uploaded a portfolio, You can actually do this, and this service is free for uploading your portfolio and knowing the health score of portfolio. It's a free of cost. You just have to go to fundexpert.in, upload, click a button, download your portfolio till date, because you don't have to manually enter also, and upload the same file back in another click. That's all it takes. Once you upload the file, you will see two information you will see. One information you will see is the health score of your mutual fund portfolio, and second information you will see is each fund wise what is the score of that fund. So you can know which funds have actually good funds, which are not good funds, and you can also take a decision on your own to redeem or redemption, whatever you want to do. And this is not a chart. So this is I have logged in mine. So you are seeing my portfolio. Okay. So my health score is this on my portfolio, and these are the funds which I am holding, and these are individual ratings for the funds. So you can easily see which funds are doing well, which are the high rated funds, which are not so low, good rated fund, which has come down in the rating, which has gone up in the rating. Anything above 3 and above is you are supposed to hold. If your health score is more than 3, it's good enough. Anything 1 and 2, it's time to look for a better fund. So those funds are not at all performing. And how do you get this? Just go to sync portfolio, put your email ID, request portfolio, a mail will come to you with the file attached. The mail will come from the registrar, because it will be generated from the registrar and come to you, because you are the owner of the portfolio. So it will come to you. Take that same file and upload portfolio, click here and upload the same file which you got, the PDF which is mailed to you. And once you upload a portfolio, within seconds your portfolio will be live. You will not have to do anything. No manual entry, and you can, from there on, you can live track what is the value of your investment as on day. What is the score of each fund? What is the overall fund rating? You can do that. This all is free. Now, if you want to auto manage the way Barclays work, transact in this fund, rebalance, then that is a service that you can subscribe. If you are a small portfolio holder, like you have 3 equity funds and less, you can choose for this option. If you have more than that, then you have to choose for this option. These are the charges for auto managing the fund. Then it will automatically generate and give you the alert. It will actually trade it. It will actually send us reverse sweep order from moving this fund to debt and debt back to equity. It will auto generate that. On the days when it generates, it will send you. You will have to say, you have to just click on that link and yes, and that's all transaction will do. It's all automated.
Will it work for equity portfolio?
Yeah, right now we are building similar thing for equity. It is not yet ready. It's in beta. Once it is ready, same thing you can work on equity. Your equity can be exchanged like that. Similarly, like how it is doing for mutual fund, same thing we are building on equity also. Once it is ready, I'll let you know. But the pricing will be similar for that. So this is for this. Now this is looks one time. There's a one thing is there which we have not mentioned here. If your portfolio crosses 2.5 lakh rupees, if you have paid once 2,500, you don't have to pay again. It becomes lifetime fee. If your portfolio over a period crosses 10 lakh rupees, then once you have paid 10,000 rupees, it's a lifetime fee. That will become one-time fee. It's not you don't have to pay the fee again. So if you are managing bigger portfolios, you don't have to pay any more fees. That once you only have to pay. So if your portfolio crosses 2.5 lakhs, basically if you have paid 2,500, that becomes your lifetime fees for monitoring. You don't have to pay any more. This is for those people so that we get serious customers, not somebody who is just coming and trying all this, playing around and simply using our algorithm temporarily. So just to make sure, that's why we have put that. Otherwise, everybody will simply pay one time and then they will waste the server. So we want serious people to use. Why people use people and waste energy? Okay. So this is for mutual fund long-term management. We have automated the rebalancing process based on those signals, which we have validated at Barclays. The same process will work here.
Churning will happen within whatever the portfolio is, and not any
external inputs. Yeah, you can go to start investing. Go to start investing and invest fresh funds.
Whoa.
So, yeah, you can add it to your existing portfolio and then it will get added.
Okay.
I'm saying it will add to existing. So here it was Flexi. So those who were saying, I want to choose a fund for my choice, I'll use Flexi. If I use Robo, then it will choose fund for my choice. It will, for that Robo, it will ask you to do a risk profiling so that it knows what kind of person you are, your psychometric. And then based on that, it will suggest you what kind of funds you should invest. What is the allocation should be as per that.
Can it be a combination of two things? No?
Yeah, it can. It will be combination. It will be combination equity and debt and mid cap, small cap. It will have all that. It will be combination. And you can have, and this is so, if you are doing it, if you are looking for tax advantages, then you should go and invest in this ELSS fund. After 3 years, they will be out of lock, then they will be monitored. Till that time, they can't be, because you can't do any shift till that time. But after 3 years, they are out of lock. Then it's time to push them to monitoring. because finally they are also facing the same risk. So you can do erasure. If you are trying to redeem any existing funds, once you uploaded it, you can click here and redeem the same fund. You can redeem any fund which you have bought anywhere using this software also.